Hello, hello everyone. Either afternoon, morning, or evening, wherever you are in the world, are you listening this lesson? Very warm welcome, everyone. My name is Anjum Satar, and I'm doing your lesson two today on financial management, and my email address there. If you have any question, you can drop me email either of this email address. So today we'll discuss our LO2, which is learning outcome 2. So before starting our lesson, first, we recap what we learned during our first lesson. During our first lesson, we learned about the different costing methods, where we discuss about marginal cost. What is meant by marginal cost is mean all variable costs. We discuss about the absorption costing, which is meant by the cost which absorb all costs. It's also known as a full cost. We discuss about various costing system: ABC, activity based costing, process costing. So in the costing, cost accounting, and financial management and financial accounting, difference between them, all we discussed during our last lesson. So we covered during our last lesson, we discussed about costing system, we discussed about costing methods, and we discussed about cost center, profit center, investment center, accountable management planning. So today we are moving forward. So all these things, please go through the lesson one. The recording is available. If you have missed lesson one, all the recording on Moodle. So just follow the Moodle, please. And if you have any question, just drop me email. So today lesson will be focus on LO2. So let's look what is a LO2, what we're supposed to do, and what sort of assessment criteria under LO2. So LO2 is learning outcome to be able to critically analyze the financial performance of businesses. So financial performance of businesses, not just businesses. So we can compare various businesses performance. We can include, we can discuss, we can explain all this, in when we'll prepare our assignment under this learning outcome 2. So when you do under learning outcome 2.1 assessment criteria, so we're supposed to be analyze the financial statement to assess the financial position of an organization. So first of all, it's crucial to know how many types of financial statement we prepare in accounts to address our learning outcome too. So recommend organization decisions based on evaluation of the financial statement using financial ratios. So we need to look around the ratios, financial ratios. What I mean by ratios? So we'll discuss various ratios today. And then we'll discuss about proposed managerial recommendation on strategic portfolio of an organization based on the financial analysis. Based on the financial analysis, you can draw some recommendations, and you can draw conclusion and recommendation based on whatever, and then we can propose is good, they have to reduce it, they have to increase, or they have to invest, they have to look around where they need to be in future, this company, based on our financial analysis. Are you as an investor want to invest money in the business? So all different sort of decisions we can make on the base of the financial analysis. So please, anybody, any question? So ask me and drop me email if you're just listening this lesson today. So financial statements, what is meant by? So today we'll discuss about financial statement estimates and exemptions relating to the profit and loss account and cash flow statement. So profit and loss. Profit and loss shows how much profit we have, how much sales we have, how much cost of sales and other expenses in a business we have year by year. So looking the last year, this year, we can compare the performance of last year cash balance, this year cash balance. We can look around assets of the company last year, this year. So all this is we can compare and we can discuss, the performance of the company, assets increase, decrease, those sort of discussions will be. And then under LO2, we need to be calculate or interpret some financial ratios. So financial ratio interpretation, decision and limitation of these ratios, employment of financial ratios internally and externally. What is meant by internally? Internally mean within our organization, and externally mean externally, the outside the organization. All this we need to discuss. So we'll calculate different ratios, liquidity, efficiency, profitability. So these sort of the ratios we'll discuss today, and I'll a bit demonstrate how you can calculate these ratios. These are some quite good, recommended books you can use, you can borrow, you can download all as well. Some books already on Moodle, so please just follow them. And within my PowerPoint slides, all the criteria being addressed as well. So we'll start now. So welcome everyone. We'll start our lesson today, lesson 2, and we're supposed to discuss and learn about the LO2 under lesson 2, financial management, OTHM level 7, or any other course you're following these slides as well. You're welcome all. So be able to critically analyze the financial performance. So we're looking performance. So when we're looking, okay, let's question, what do we know about financial statement? Do we know how many types of financial statement we prepare in accounts? If you don't know, we must need to know how many types are, because if you don't know the financial statement, what those are, and of course, you can't find the information. So we'll see today, we'll discuss, we'll try to find some company's original financial statement, and on the basis of this, we'll discuss, what their performance are. And financial performance, what is performance? You may be heard about, and you have a performance appraisal, checking the performance, performing or not, which area we need to improve, what are the area of development. Normally we don't use the word weaknesses, area of weakness. No, we use it's better to use the word area of improvement, area of development. So every organization, every individual, we all have an area of improvement where we need to develop ourselves. So this is we'll go through today. So we'll start. So financial statements. The objective of financial statement according to IASB. IASB stands for International Accounting Standard Board. International Accounting Standard. They set the standard how the financial statement will be prepared, how the financial statement will be look like, and what sort of the structures will be. How we can put our income, expenditures, and it need to be true and fair information. So all information need to be whatever will show if the company should be worth of those. If I'll say my asset, my property is in 100 million, it should be 100 million, not more or less, So that is all about. So financial statement provide information about the financial position. What is the position of the company in terms of asset, liabilities, and investment? What is the performance? What happened last year, this year? Their assets increase, their asset decrease, what's happened? All this shows under the financial statement. Changes in the financial position of the entity mean in a business that is useful to a wide range of users. Wide range of user mean wide range of stakeholders, those have any interest and they want to be look around the company information. Either they want to invest, either you want to apply the job in particular organization. Is good to be look around the financial statement of company. If those are the financially sound and financially healthy company, those will provide us more sustainable employment. So always is good to be look around. Making economic decisions, we can either you want to be invest, you want to apply for a job, you're a supplier, you want to provide a credit to, you want to sell them goods. All decisions we can make on the basis of looking the financial statement. So how many types of financial statement we prepare in account? There are, if we are anybody knows what is meant by public or private limited company? Okay, public limited companies are the companies those issue shares to the public. Private limited companies are the companies those have a private shareholder, those normally not on the public domain their information, who are the investor in the company, because they keep the secret, they keep the information themselves, they don't need to really disclose. They have to disclose their financial matters in a way to HMRC for the tax purpose, but not to the public. It's not required for them to be published. They can publish some sort of information, but it's not compulsory under by law. So which is they can publish information, but it's not, because they don't need to be issued the shares to the public. So that's why it's now need to be in stock exchange. Okay. So next we're looking the statement of, so first statement of comprehensive income, which is known as profit and loss statement. Profit, either we have a profit or loss in a business. So statement of financial position, which shows assets. So statement of financial position, also known as balance sheet, it shows assets, how much worth of asset company have. Asset mean anything we own in a business, anything have a value is called asset. Liabilities, anything we owe, if we are liable to pay, it's a legal obligation to pay. And capital, all these figures show in statement of financial position and balance sheet. So assets goes year by year. So last year property was 10 million, we bought more, now it's 11 million. So all this will carry on showing in the statement of financial position, which also known as balance sheet. Third statement of cash flow. So statement of cash flows shows where the cash being used. Cash flow statement, which shows three activities. Operating activities, it means our day-to-day business. Like if we look day-to-day business, like if we'll think about Tesco day-to-day, Tesco is a supermarket in the UK. They're just selling consumer goods, so that's consumer goods is their key business. So that's a operating activity. If they are earning cash or making cash under those activities, so we call that, we treat the cash flow under operating activities. How much money received, how much money being spent. Next, under cash flow, we have other activities is called investing activities. Investing activities mean if we have a spare cash, like Tesco is a supermarket, but they have a spare cash, they can invest in the property business, or they can buy more assets and they can sell in future. If they're generating any cash, the cash is going out and in under investing activities. So we will look around and we reconcile the cash there, how much cash is positive or negative under investing activity. Last but not least, this is called financial position, financial activities, how much money they borrow. Like long term, under financial activities, we look at the long term loan, or they borrow money to issue more shares. So if they borrow more money, it means your cash position will be better, but your liabilities will be increased. So all these three areas is shown are company cash flows, which we'll see today. So, few companies financial statement, and we'll see what's happened on their cash position of these companies. The last statement of chain in equity, at the shareholder statement, how many shares during the year. Is it share more issues? We buy back some shares, from public, so all shows in the statement of equity. So nowadays, most of company have a business more than one country, so they prepare the financial statement under IES 1 is called International Accounting Standard 1. So requirement how the financial statements should be structured. Complete set of financial statement comprise of the statement of all these, four types of statement, those we just discussed above. So how these statement look like? Statement of profit and loss, which is the summary of income and expenses. Usually year and calculate the profit which we can, and net profit figures we can find in the financial statement in a profit and loss account. So your statement of profit and loss account should be look like. So sales revenue, also called turnover, is mean the sales figure, also known as a revenue. So let's see your return. If you have any sale return, is become a net sales, and then cost of sales. Cost of sales mean how much worth of the goods you bought or manufactured if you're a manufacturing company. So your raw material, and that's how much cost you and how much you sold. If cost me 80 and I'm selling 120 will be my gross profit. Gross profit means the difference between buying cost and the selling price. That's your is called gross profit. Then you have some other income that's not your normal business. Maybe you have a spare cash, you invest it, you receive some discount from other, you have sold some assets like property plant, you bought it few years ago and you're selling it. It's called other income. So you are including in the profit and loss account, and sometimes expenses, other expenses, which is called indirect. Normally we have a lot of indirect expenses as well, like rent, like discount allowed. We are giving discount to someone. Carried onward is mean the delivery charge, electricity, depreciation, irrecoverable debt. People not in a position to pay allowances for doubtful debt. It's mean like bad debts, we are making adjustment. Maybe we overestimate and underestimate previous year, so we need to make adjustment. Those stationary, telephone, all these sort of the things which shows in the profit and loss. Anybody any question, drop me email, I'll further explain you and we'll see the company actual statement. Next statement of financial position shows our asset. Non-current asset is mean long-term asset. Current asset means short-term asset. Non-current asset like property, plant, equipment, those we use not 1 year, we use more than a 1 year, many years. So asset is mean the asset which carry on changing in within a year, carry on replacing, like a cash position, cash going in and out from the business, and it's called current asset. Is also known as a working capital cycle. By looking current asset, current liabilities, we can find how long the capital staying in a organization. So that's all about. Anybody any question? Non-current liability, long-term liability, like a mortgage, bank loan. It's not in a years we need to settle. It takes more years to settle. Current liability, anything which we need to settle within a year. Accounting equation mean assets minus liabilities become net asset equal to capital. So that's it shows the accounting equation. You will see there the financials position will be look like, where non-current asset, current asset, all our current asset can be inventory, stock, receivable, you're selling goods on credit, bad debts, customer default, not going to pay us, prepaid, we paid advance some things to others, is still our asset. Bank, cash, all these are asset. Asset means the things we own have economics value, called asset. Liability, something we owe. It's a legal obligation we need to pay to various stakeholders, like a trade payable, pay to HMRC, accrual, we get the services like gas, electricity we use, but we not make any payment, it's called accrual expenses. So then we can assets minus liability will find that net asset, and the net asset figure is always equal to capital figures. So capital is mean opening capital, profit for the year, which is shows end of the year in the profit and loss account, we add and we minus drawing. Drawing means something you draw for personally use, When you investing money in the business, it's a business money, it's not your money. So it's not your money, it's a business money. So we always look around. Okay, anybody, any question? Okay, so up to now we have discussed we're discussing be able to critically analyze the financial performance of a business. We discuss about what do you know about the financial statement. We discuss about how many types of financial statements: statement of comprehensive income, profit and loss, balance sheet, cash flow statement, statement of equity. We discuss about financial statement, profit and loss, what sort of the things, that's the structure of profit and loss account. We discuss about up to now asset, financial position, also known as a balance sheet. It shows non-current asset, long-term, current asset, short-term, non-current liability, long-term liabilities like bank loan, mortgages, the current liability which we have to pay within a year. Accounting equation, we discuss asset minus liability is equal to capital. It's a balance sheet structure which we discuss, that's look like. And then we discuss non-current assets, land, building, stores. Current asset, when you add, it's become your total asset, minus your liabilities become a net asset, and net asset figure your should be equal to capital. So capital we can calculate as well. If you don't know the capital, your net asset, it means the same capital figure. So capital is mean investment in the business, like a share capital. You add the profit of the year from the statement of profit and loss, and less the drawing in the anything you draw for personal use. Okay, that's all about the financial statement. So these financial statements show the performance as well. So we'll move to next area of discussion is the ratio. Ratio analysis is a good way to evaluate the financial result of your business. Use of financial ratios include compare your business against the different standard using the figures on the balance sheet, which will go through both. Financial ratios useful indicator to measure the financial performance of the company. Most of ratios be calculated from the financial position provided by the financial statement. Ratios can be used make comparison different period. Yes, last year, this year, but try 12 months. If you comparing 1 year is a 12 month, other year is a 6 month, your financial statement, that's not a good comparison. So in the same industry, like is a food industry, you compare one company in a food industry, other company with the food industry, not from the food into oil company, because it's not a good comparison. So always look benchmark, what is the key performance indicator, what is the benchmark, what is the standard in that particular company result, average, what is the average result in the industry, the company where we are doing business and sector. So these, okay. Next we're looking the financial ratios according to accounting coach or various other authors. Financial ratios as a mathematical comparison financial account. These ratios help the stakeholder. Anybody knows what is meant by stakeholder? Stakeholder mean anybody who has any interest in the business is called stakeholder. Their interest will be influenced due to the decisions or the action from the company. So that's we call stakeholder. There is a difference between stakeholder and shareholder. All the shareholders are the stakeholders because they have an interest, but not all the stakeholders are shareholders. Stakeholder can be customers, suppliers, but the shareholder only investors. Ratios tool used to analyze the business financial position. Financial ratio divide into 4 categories. So financial ratios we can divide profitability ratios where we look how much profit we made. Liquidity, liquid mean cash is most liquid. Liquid, anything which we can convert into cash, and cash itself is known as a liquid. Efficiency ratios also known as a use of resources, how effectively the resources we have in a company we deployed. We're not really left, the capacity empty. So if we're not applying, not using right resources at right time, at the right place, with the right amount, we're not going to maximize our profit. So financial condition, all this, the solvency ratios, what is the position as a financially, how much borrow money, how much company we own or someone else. So these are all ratios and divide into 4 categories. Liquidity is a short-term company's asset and liabilities, current liabilities, current asset divided by current liabilities. So these all we can calculate these ratios by using the formulas. I'm going to show you on the next slide. Okay, any question? Guys, if any question, drop me email. I'll show you how to calculate, few ratios today. So you will see there, I'm going to send you separate formula sheet as well. You can, at the top, when you're doing analysis, business analysis, you can write, for suppose, is Morrison 2 years, always good to be compared 2 years at least. So 2017, 2018, for suppose, or 2016, 17, you can find a financial statement. Then next, maybe we can compare ASDA 2 years and maybe one other company. You can compare, as many businesses really you want to be, and you can look around what their gross profit divided by sales, also known as a revenue, you can calculate as a percentage. Or you can find, all these ratios calculated online as well, one through various websites. But it's good to be you calculate yourself, because when you calculate yourself, that is quite, it's good to be you calculate yourself. Anybody, any question? Okay, let's, we'll go through next. So profitability ratios, liquidity, then we'll go through gearing ratios and all, these ratios. So let's all go through with this template with you as well, which I'm going to send you this in. So profitability ratios, then we can go through the gearing ratios, then is a liquidity ratios. We can calculate the use of resources ratios as well. So these are the ratios you can calculate. As much you can will be great. So if you go on, let's, we'll go through. If I'll go online and I'll try to find Morrison. So we'll try Morrison financial statements. Or you just want to be financial analysis, so that will be performance normally is a given. You will see their financial ratio, it's giving quarterly or yearly. So if you want half yearly, you want full yearly, so you can find, like 2017. So annual report, we can click here, so we can find financial statement of Morrison. So let's, I'm going to download financial statement of Morrison. You want full report, you can download. Okay, we'll see it now. So is all the information, which area they good, bad, which area they perform better. But we are looking the financial statement allow to according to your learning outcome. To find quickly, Control F, and that give you the search button. Yes, if I'll type financial, yes, statement, you will see there. You type, for suppose, income statement, it's take you there. Yes, and so that's the way you can. If I'll carry on doing, you can go through the table of contents of this report that shows you the page number. State you go down to that. Okay. So we'll go through. You see there's the written there, group financial statement. Normally they have different, always try to be group. Group mean is that they have maybe so many subsidiary companies, so we call them group. They're working as a group. All business. Okay, so if we'll go back to original, because all these are the notes, sub notes to read, we don't need to. You just need a figures to compare to address this learning outcome. So these are all financial statements. We'll go through. Sometimes it's difficult, to find. So I'll go from here. I'm looking first, statement of comprehensive income, page 63. So I'll go page 63. It will be slightly different page because the reason, they put something at the starting of the numbers, but on the report it should be page 63. Okay, so I'm there. You will see there on page 62 and 63 now. So last year, this year, what's happened? You will see there, last year 16,317 million that was sold, and this year is increased by. So always good to be use your calculator and take the difference between last year figure this year, and thus you can discuss, because your assessment criteria 2.1 is all about an analyze financial performance in terms of financial statement. So if I'll minus this from current year's last year figures, so I can say how many million this company's sales is increased. So 945 million revenue went up, is increased. Yes. So which is good. 945 million. Great. This company's perform better. So we'll go through next. We'll see what happened with the sales, cost of sales. So my sales figure went up. What's happened? Cost of sales minus your last year. Okay, so that's 916 million. So my sales went 945 million, and my cost is went up 916 million. So is overall my profit should be increased by the difference between, because the cost and the sales. So you will see there, if I look last year, my gross profit was last year my gross profit was 604 million, and this year I have my gross profit is 604 million. So take the difference, is a 29 million is our gross profit went up. So if you need to calculate the ratio, so if I'll go back to my formula sheets, so I'll go back to, and formula is gross profit divided by sales. So gross profit divided by sales. So I'll go through there. What is the gross profit divided by sales? So gross profit is 633 divided by 17,262. Yes. And whenever you need a percentage, times by 100. Yes. We all know how to calculate percentage. So it's coming 3.66%. So if I'll go back again, 633 divided by, I just want to make sure my figures 262. Yes. So all these in millions times by 100. So I'll get my figure as a percentage. So 3.67, two decimal. That's my 3.67%. So I'll see last year 604. Formula is gross profit divided by revenue, or we call also sales as well. Revenue means sales. So 3.1. Oh, be careful on calculator. Your figures can be. So always look your figure on the calculator right. Times by 100. So 3.77%. Last year as a percentage, while my gross profit was 3.7, and this year I have a 3.6. 0.03% my gross profit went down. So is a decrease in gross profit as a percentage. No doubt my sales increase. Yes, my cost of sales increase as well, but gross profit as a percentage to sales is dropped compared to the last year as a percentage wise. So as a percentage we not really gain properly. So please, this way you can calculate these ratio by using the formulas, and if you need liquidity ratio you can look around. So balance sheet, next balance sheet you can look around the last year, this year what's happened. Non-current asset, that's a total. Always discuss the total, what's happened there last year. So non-current asset went up by if you take the difference between 8385 minus here, so you will see there is an increase uh, around 315 millions increase in compared to the last year and this year assets. And Sam, you can look around the current assets as well, last year's short-term assets. So if you want to use calculate the liquidity ratio, go back to your formula sheet, look around, and then you can calculate liquidity ratios. If I look under liquidity, current asset divided by current liability, so you can find the current asset figures from this statement, and you can divide by current. Okay, current asset divided by current liabilities figure, so you can look around. Current asset is 1278 divided by liabilities 3081. So we'll see, normally is a good, our current asset should be higher than my liabilities. So 1278, so my current asset divided by my liability, which is 3081. So if I'll go through divide it, it's coming every pound of asset you have. It's mean, your liability is more than your asset. You have a liabilities is only 41 pence your asset against the pound of your liability. So you have a more liability than asset. You will see the figures as well there, which is not a good financial position of the company. So that's you can discuss in your assignment when you write. And the difference between last year, this year figures, all is absolutely fine. I'll calculate few ratios, please. Okay, next, cash flow statement. I earlier mentioned like cash flow statement have a three activities. Operating activities, so you can see what is the net cash flows last year, this year. So this year's cash flow is decreased. Net cash, they have a 744 million. Last year was 798 million. If you look under investing activity, last year the cash went out of the business 282, and this year they have 380 million. So that's you can look around. If you look under financing activity, so last year cash position was 857 million. So this year the cash went out of the business, so they have settled some liability and they have used the cash. So what's happened, net effect on the cash, the net figure for this period. So last year the overall cash position was 326 million. So this year they have 327 million. So the cash is went up by 1 million. Only cash went up by 1 million. So which is still they have a cash. So 1 million is cash went up. So that's all about the figures. So cash flow statement, balance sheet, and profit and loss, all you can discuss in your assignment. So you will see there what we discussed earlier, 2.1, analyze the financial statement. I have analyzed the financial statement. Okay, you can draw the decision by either the gross profit went up, you want to be invested in this company, you can recommend after calculating few ratios, your recommendation is based, you can explain ratio, you can recommend it, and then propose managerial recommendation. So you can maybe look around, can the company need to increase the cost, company need to look around their strategies and what they have now, or they need to future change. So I have already put some slides. So a company performance maybe compare its previous period, past result, like earlier I discussed, and it's a website is, if you want to read more, you can go through link please, which I already put, is the ACCA link and under the reference page. Horizontal, they try to be overcome the problem of vertical analysis, the company's performance for the particular period, performance equal and the company's same period. So please, that's again comparison, performance, industry averages I discuss about. It's quite good to be which industry we are, what is the average ratio in the industry and what we are. That's figures we can find through industry averages, normally independent in a list as well on the watchdog website, regular website. They normally publish those information which you can use. Other than normally company itself, they're saying we are above the industry, or we are slightly behind the industry, but we are small, or we just started a business. So this activity I already just put it there. You can download any company's financial statement and you can compare. I'm going to upload this comparison template as well, where you can calculate these ratio. You can find the figures from these statements. So let's, next we're looking now. Okay, so next, consider the strategy. So business, that's your recommendation. There maybe have a particular weakness in the company, have the business plan to deal with it. Maybe you can suggest, you need to make a business plan. Turning business around and making the changes take a time. So maybe at the minute they make some changes, the ratio is poor, but in the long run can be positive effect, on the company position. Impact of a decision, maybe recently they make any decision, they have their impact on the ratio. So this sort of the discussion and recommendation can be based on, so that you can include in your assignment as well. Anybody, any questions? So if you don't have a question, so we'll finish this lesson today. So just a bit recap what we learned today. We discuss about 4 type of financial statement we prepare. Income statement, balance sheet, cash flow, and statement of change in equity. And we discuss about what is meant by financial performance. We discuss about ratios, 4 major types of ratio: profitability, liquidity, use of resources, and financial position ratio. These we can, and we discuss, and I shown you the company statement, how you can find the figures last year, this year, and you can look around and you can measure the performance of the company. So please, when you write your assignment, make sure you go through, add your references, read a bit, and embed figures in your writing as well to justify your discussion. So all the references I included there, the list of references you will see there are already recommended books. If you go online under this, assignment guidance, you will see there some books are recommended. ATHE is there, CMAS, all these are, accounting bodies, their website are useful as well, some journal articles. So that's all we can. These are the recommended book or recommended resources which we can read and to address our learning outcomes. So that's all today from me. Have a wonderful day, have a wonderful time where you are in different part of the world. So please just, listen this, watch this, and just go discuss about financial ratios, and go through the different companies' financial statement, develop your good understanding about financial statement and financial ratios. Watch few videos on ACCA website as well, which is quite good. The website called, I'll just show you all, is quite good to be. If you set up your website, it's a free link. You can set up your account. It's an open tuition. Type in the search box, what is meant by financial position, ratios. I'll then watch few lectures there as well. So you will get, very detailed as well. And I explain you how the financial ratios, how we can make decisions based on these ratios. So anybody, any question, feel free, drop me emails and I will speak you. Please go through and read, listen, and watch, and go through all the handout, lesson 1 and lesson 2. And I'll speak you next week, 11:30 UK time. So please, wherever, and check online what is the time difference between where you based and in the UK. So just follow the standard time of UK to attend this lesson. If you have any question, drop me email. I drop emails to Raman. And have a wonderful time. Have a nice time. Thank you. Bye bye.